Over in Kenya, National Bank of Kenya has posted a 53% fall in full-year pre-tax profit to 1.15 billion shillings. Hurt by higher lending rates, net interest income plunged 94% to 310 million shillings. For now, let's take a look at the Kenyan market scene. Recapping first, as things played out on Friday's trading session, we had the Nairobi Stock Exchange rising for the first time in 7 sessions by just 0.1%, and that as some small cap firms rose on the back of strong results, strong earnings. We've got to take in mind improved income from dividends as well, and then sustained speculation on counters yet to announce their results as well. We had shares in the region's leading media house, Nation Media, rising 5.9% to 321 shillings per share, and that after the firm said on Wednesday that its full-year profit rose by a quarter. Of course, we've had traders saying that Nation Media Group is still bullish, backed by the 145 bonus issue and 7 shilling 50 final dividend as well. On the currency front, the Kenyan shilling was steady on Friday. The trader saying likely to weaken in the coming sessions, and that due to a traditional rise in demand for dollars from importers at the end of the month. It had been hemmed in the 85 to 86 range last week, hampered by concerns over a constitutional challenge to the result of this month's presidential elections. The Supreme Court, remember, is due to rule on Odinga's petition by the end of this week, and if it orders a rerun of the election, pressure could pile up on the shilling. For now, we've got the unit sitting at 85 shillings 75 to the greenback. Let's get into some analysis of these markets now with Ronald Lugalia, who's an investment analyst at AIB Capital. Thanks so much, Ronald, for joining us this morning. Well, as I said, National Bank of Kenya out with results this morning, and that headline number is startling. A drop in profit of 53% coming to the fore. What do you make of the headline numbers released today?
Okay, it does not come as a surprise to me. A drop in profit was expected because at the third quarter, September last year, 9 months from January, NBK had around 294 million in terms of their profit. That compares to 1.1 billion that they had made in 2011. So most likely you would have expected that they wouldn't make much in the fourth quarter. But of course, yes, you would also try to think about the high interest rate that now we had last year, which could have also increased their cost. They were opening up branches around the country. They were also introducing some other new products, so the operating costs were also high. But NBK is a bank that now people should be watching at, because most people would think that now is a sleeping giant. At a P of 3.94, you would expect this bank, okay, to pick up going forward because of the new management, which we tend to believe, okay, when they start introducing some new products like corporate clients, small and medium enterprises, most likely you would see them unlocking the potential that they haven't unlocked for a very long time.
So safe to assume that you'd be a buyer in National Bank of Kenya at current valuations?
Right now, I would, if I'm a long-term investor looking to, for a company, a banking stock which hasn't tapped some of its potential, I'd look at NBK right now, because with the new management, we expect, to make a turnaround. I would want to see what they do in first quarter towards the first half, and then make my concrete decision. But going forward, I expect investors to start looking at and the bank and in the general market to start investing based on their fundamentals. It's
interesting that you say it's the higher interest rate environment that has had a bearing on these set of numbers, Ronald, because making headlines this morning is the fact that lenders are likely to lower their borrowing costs moving forward. Lending rates expected to fall as the current levels are not sustainable, many analysts saying, in view of the lower policy rate. So are we looking at a changing of the tides here, and how soon?
Okay, interest rates at the current CBR rate of 9.55, 9.50, CBK just maintained the number from the previous that number they had issued. So most banks are likely to try and maintain the rates at where they are right now.
At 18%, I mean, that is quite a large discrepancy. We're looking at 18% relative to 9.5%.
Okay, most probably it is about the policies that now we have right now. Okay, we still have a bill that is that is yet to come through, whereby they wanted, okay, the parliament had pushed like now to peg the lending rates on some other limits, which has not come through. But we expect going forward, as Kenya being an open market, we expect the banks, because of high competition that is going to be there for customers, they should be able to levelize the interest rate and maybe come down. But what I know about our banking sector, the interest rates are based on the banks to make their own decisions. It can't be pegged on a rule or a policy that number should take it down.
Well, despite that high lending interest rates and lending environment, we've got companies still forging ahead with their expansion plans and delving further into debt. Ronald Kenyan seeking 429 billion shillings to finance energy projects moving forward. The deal is the largest of its kind in sub-Saharan Africa and is expected to see the electricity generator established power generating projects in wind, solar, geothermal and hydroelectricity over the next 5 years or so. What's your view on Kenyan and the current capex plans it has in the pipeline?
For Kenyan, is a utility company. The potential is so big. If we look at what you expect under the Vision 2030, in 2030 we expect the demand for power to be like 17,000 megawatts. And this is what Kenyan is looking out the number to tap into. Right now, the source of finance, the number they are looking at is from strategic investors who are willing now to come out. So it is a matter of structuring their, being able to structure their capital and plan in a way that it can still be able to meet their obligations in terms of paying interest number to the bondholders and at the same time giving it back to the equity holders. Yeah,
well, some of the banking groups that are set to leverage off its capex plans are the likes of Barclays Group, Barclays Bank of Kenya, Barclays Bank PLC as well, where they're a part of that consortium, in fact leading the consortium which has been approached to finance 1,600 megawatts worth of electricity projects moving forward. In the meantime, Airtel Kenya not sitting on its laurels either. It's investing 8.5 billion shillings in local operations in the country. Ronald, how do you see this shifting the landscape and specifically the kind of implications it has for a player like Safaricom?
I wouldn't expect the Airtel move now to make a big impact on Safaricom. Remember, Safaricom has been a strong counter all through. It has made tremendous move in terms of developing its product, developing its business, and it has set itself out as an innovator. And Airtel coming in, Safaricom has most of the market share, and it has really strategically positioned itself in all the sectors in the telecommunication industry where the business is going to grow. We're talking about data, we're talking about voice, and SMS also. So I'm talking about also IT. So Safaricom is well positioned and it has the capacity, it has the funds number to be able to fight off any other competition that number might come out from different